He's the Doha Bank Chief Executive, Raghavan Seetharaman. Thank you so much for joining us on today's show. Now, it has been quite a struggle for a lot of the banks here in Europe. They're also bigger, they're more exposed to the capital markets around the world. What do you make of actually banks in the Middle East, including your own? It seems you have weathered the storm a little bit better, but then you're not as big.
Well, we are strong in terms of macroeconomics, but we're not isolated from the global economics. We could see the impact clearly. Qatar is an exception. It's going to coast not less than 11% GDP growth. Entire region should report not less than 3.8 to 4%. National income is growing between 7 to 8%.
And we should say this is, of course, a lot to do with the natural resources.
Absolutely. It's a commodity-driven. If you say the Gulf states, 60 to 62% of the economy is driven by oil and gas. Qatar has got oil, natural gas, and petrochemicals. That's why they are embarking on diversifications. That's also paying. Sovereign fund has been deployed world over, investment partnership, joint ventures. That's also balancing the overall revenue streams. So it's a very difficult journey in real terms, but financial stability has been the key. In Qatar, we have public-private partnership model, capital introduction by the central banks, tests we have done, and again, clearly, the banks have been supported by the Qatar government as such. Again, there is a stable and functional growth in real terms.
But Mr. Seetharaman, what the crisis has showed us is that really actually no one is immune to a financial crisis.
Absolutely.
Because everything is so interconnected. How has it changed your strategy for your bank? Are you looking at different products, possibly abandoning certain products?
Absolutely. The business model is going through a sea of changes. There are too many players. The changing business trend, again, onshore, offshore banks. The market has been liberalized. You have Qatar Financial Center, Bahrain Financial Harbor, Dubai Financial Center. Again, dollar substitution in terms of lending. It's a huge realignment in terms of business model, and we need to reignite the overall globalization plans, and that's what a good institution should do. We are doing it.
And there's so much risk aversion actually out there from the markets and from investors. Do you share this cautious, pessimism, or are you a little bit wary of what's coming in the next 6 months to 1 year?
Let's take it. The world is due for double dip, but for the quantitative easing, nothing has changed in the world, the West. Only the real economies are supporting the recovery. The financial economies have to convert as reals. That's the definition of the issue. So in real terms, the business alignment has to change in line with the global perspective, universal standard in terms of accounting, liquidity management. That's why Basel III is important. Capital rules needs to be realigned as well. Banks are well capitalized as far as Qatar or GCC is concerned. Over 15% capital adequacy we have. Basel II we are following. But the world at large is not yet recovered from the ICU.
But if so, you're expecting a double dip recession?
Absolutely.
In the next, year or even less?
Less than 6 months' time. Clearly, the governing evidence is for us. We define the logic in terms of macroeconomics, but we are supplementing only additional energy through liquidity. That is not going to recover the world. Real conversion has to take place by implementing G20 decisions, which will take 2 to 3 years. So we are in transition to see that world at large is coming out only on account of the reorganization in global terms. Global governance is important.
Very interesting, Mr. Seetharaman. Thank you so much.